While the Bloomberg articles are gloomy over here, let's see if the stock market is in as much of a bad shape or is there any hope for a bit of a recovery. Welcome to myfinancesteacher.org, where on the 15th of June, I've mentioned to the members that looking at the general stock market, there might be a bit of a bounce coming up just around the time of the FOMC meeting. So far, this is exactly what we are observing, and what I mentioned to the members last time was that there is some chance that the FOMC was the end of that previous short-term daily cycle, which in this case only lasts for 28 days. It's unusually short. Usually these cycles last for a couple of months. But taking into account that the previous cycle was pretty long, lasting for 85 days, both together would average somewhere around a couple of months, so close enough to that average duration of the short-term daily cycles. So a bit of a bounce into a new daily cycle is a possibility that I discussed with the members on the 15th of June, especially after these huge red candles with huge gaps between them after so much sell-off. Going into that 75 basis point hike, some recovery is quite likely. And as we've talked about that a few days ago, if you want to get timely updates on a range of markets, feel free to join us at myfinancesteacher.org. So what I see on the market is a bit of a volatility around here as market participants are unsure of any kind of bounce coming up after such a strong decline. Then a bit of a rally into early July, into first half of July perhaps, to retest that 50-day moving average again before the stock market drops. Perhaps into that late July FOMC meeting, although as the market is already pricing in a 75 basis point rate hike, perhaps the drop isn't going to be extremely severe, but a bit of a continuation down into the short-term daily cycle low, as well as the intermediate cycle low, is still likely before I see a bit of a stronger rally. Such a scenario in the intermediate term would give us an intermediate cycle lasting close enough to an average duration of just around half a year. So in the short term, I do expect a bit of a bounce into a new short-term daily cycle. But in the intermediate term, the ongoing intermediate cycle is still not extremely old, at only 117 days. So it's more likely that the intermediate cycle continues down for a while after a bit of a bounce, again giving us closer to an average duration of around a half a year. Although it's not impossible that the intermediate cycle has actually finished yesterday, as the stock markets are quite oversold, and an intermediate cycle lasting for 113 days is not impossible. For example, the previous intermediate cycle was also shorter than average at 143 days. So while there is a 55% chance, I would say, that the short-term bounce is coming, followed by another trip down into the intermediate cycle low, there is perhaps a 45% chance that the intermediate cycle has also finished on the 17th of July, meaning that we're going to see a bit of an upward momentum in the general stock market for a couple of months rather than a couple of weeks. But again, to emphasize, I do expect some strength, especially into early July. Remember, about 4th of July, where the general elation in the population is likely to push the markets higher. And looking at seasonality of S&P 500, we see that early July is usually quite strong, whether you look at seasonality going back to 2012, 2013, or going back to only 2014, 2015, or 2016-17. In any of those cases, S&P usually climbs upwards around early July. So a bit of a short-term bounce, perhaps followed by a bit of a decline into late July, early August, perhaps into that FOMC meeting. But as the market is already pricing in a 75 basis point rate hike, there is that second less likely scenario where the decline is not going to be that significant, followed by the next short-term daily cycle rally, implying an intermediate strength upward momentum in the general stock market, implying a new intermediate cycle since a few days ago. Again, that's a 45% chance scenario in my opinion, with a 55% chance scenario of retesting the previous lows, making slightly lower lows before a new intermediate cycle rally takes place. And lastly, looking at the optimism index on the general stock market, we see that it's creating a bit of a positive divergence between the mid-May and mid-June lows. The S&P 500 is showing lower lows, while the optimism index is showing higher lows. That's a bit of a positive divergence. But the optimism on the market is still quite low at only 23, so even if we're going to see only a short-term bounce followed by a significant decline, I would like to see this optimism index somewhere above this green line, perhaps around the level of 40, before we see the last swoosh down into that intermediate cycle low. But again, nobody knows the future. I'm trying to share my opinion with you. So in response, let me know, how do you feel about the general stock market over the next 1 to 2 months? Have a nice day. Bye-bye.